Hello traders and welcome to the Friday wrap-up, January 30th, 2015. Traders, great to be with you, coming to you live from Pattaya, Thailand. It is bright blue sunny skies and white sandy beaches. Yes, it's quite cool. It's jacket weather. It's quite nice, I have to tell you. Traders, don't forget this is brought to you from our great friends at FXCL. FXCL, excellence in trading. All right, traders, if you would let me introduce myself to you. My name is William Gilday. I'm your moderator through the Friday wrap-up, which we go over about 15 daily charts I think we have today. And we just basically take a look at some price action, and that's all that's on the chart, and the 200 exponential moving average. Traders, I've been trading from the year 2006. In 2008, I retired from a great career in the fire rescue department out of the great state of Florida, out of the United States. And I came over to Thailand for a 3-month vacation. And, well, traders, I am still here. I guess I'm still on vacation. Feels like it. All right, traders, I do trade the markets every single trading day in the Forex. I do listen to fundamentals. I do read lots of newspapers. And I do have a news feed that I pay a lot of money for. And I am a technical trader. So most of my trading is done technically, not fundamentally. But it's good to know both. All right, that's just a little bit about myself, traders. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most of all, do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, weekly commentary. Good week last week. I missed a lot of trades, had some technical issues and some internet issues, so I did miss a lot of trades. In fact, I don't even think I took a trade last week, a live trade. And I've had this head cold and I can't get rid of it. But as far as trading goes, there was a lot of pips to be made. Thursday, Wednesday started getting a little crazy because of FOMC speaking. So, there was a lot of things going on last week, but there were some pips to be made. Some of these entries were not easy. Some of these entries were really, really difficult. One that comes off the top of my head was the New Zealand dollar. That didn't give you a pullback. It just continued down and was a great trade for, I think it was like 50-something pips. I mean, a lot of these trades are done. The Euro Aussie. Wow, did you see that thing with the Euro Aussie? Unbelievable. Take a look at that chart. I think I have it on here. Just blasted off. Unreal. So a lot's going on throughout the week. Some good pops, good pips going on, and that's a good thing. And that's why we trade the Forex markets, because it's volatile, it moves, and we have an opportunity to make some profits. So let's get started. We have we have probably about 15 daily charts we're going to take a look at, and we will start off with the euro dollar. Here's the euro dollar. Nice thing that I like about this is the Bollinger Band's a nice open, and that 200 exponential moving average is way far against from price. That's a good sign. I don't like that we're in a 4-day consolidation. There's that consolidation thing. No price action, no consolidation. So what does that mean? That means that if you use pivot points are going to be off come on Monday, right? Because of this consolidation of 5 days. So it's really, it messes up if you're using other tools other than price action. I will tell you that 85% of my traders is absolutely done by pure price action. That's it. I'm big into trend lines and channel lines and stuff like that. And higher time frames. I find it very important that we trade higher time frames. Not that we trade higher time frames, but we look at higher time frames. I'm pretty addicted to the daily charts. Here's a dollar Swiss. This was this big red candle when they lifted that 1.20 floor of the dollar Swiss. Came all the way down to, was that 82.50 something? And it's already up to 91. So it's inching its way back up. And it'll end up where it was before, probably by next week. By the time next week we're doing this, we'll see the same thing. All right, here's a pound dollar. Great here. Again, take a look at this sideways price action. Now realize this is a daily chart. I like the 200 exponential moving averages a long distance away. That's a nice, really good quality of this chart. I don't like that the Bollinger Bands are getting close to each other. So like we're getting into a Bollinger Band squeeze, and that's because we're in this range, and that's just showing low volatility. Now again, these are daily charts, so there's a lot of pips. Probably one of these candles is probably 30 pips, right? So you have to look at that in a different way. However, it is what it is, and it is sideways, and it is consolidating, and we want to see this pop out either way, either to the upside or to the downside. That's the beautiful thing about trading Forex. We don't care if it moves up or it moves down. We can make profits. Oh, I would think that this is, I have no idea, my friends. I can't believe I put one in there and don't have a name on it. Keep going. Here's our Aussie dollar. Just continues to drop, drop, and drop. And I don't know where my numbers are on the side, but the Aussie dollar continues to drop. And I think it's about 84 at the present time. And, you know, that's what they want. I mean, the Aussies want this down at 75. So, you know, 73. So this is nothing that the Aussies are concerned about. Let it drop. They're not concerned about it. They want it down. They want it 75, 74, 73, from what all the gurus are saying out there in the media, as we would call it. And look at that. The 200 exponential moving average is at 8,700, basically. Interesting. All right, take a look at this New Zealand dollar. This is a New Zealand dollar. This is what I was talking to you about. This third candle from the left, from the right here, must have been that candle that just, this thing just dropped. And I'm telling you, it dropped, and it started dropping like 3.5 to 4 hours before the London Open. And I said, this isn't going to do nothing. And I ignored it, and I should not have ignored it, and I should have taken action on this. This was a nice move, and Wednesday, Thursday, beautiful candles, and this is what we're up with, and made some nice movements here. Dollar CAD. CAD's getting weaker and weaker. I think they're getting a little nervous, and the dollar is very strong. You know, what could you say? Buy the dollar. Why would you buy the dollar? Right? I guess that's one main part of this chart is why wouldn't you not buy the dollar? The dollar's strong. As you know, our last chart of the day is always the dollar index, and wait to see that rocket ship. But, you know, why would you not buy the dollar? You know, buy the dollar, right? Okay. Here's a pound Aussie. Yeah, anything's stronger than the Aussie, and the pound is just taken off from this. This was a really nice bounce. If anybody caught this off this 200 exponential moving average, even if you didn't get it on the first or second candle, but I'll tell you, if you got in at the top of that Bollinger Band, when it broke that Bollinger Band, now you would have been at the top of that Bollinger Band. Now, you know, the normal rule is we don't take trades that are outside the Bollinger Band. We wait for it to retrace back into the Bollinger Band. But what would be the difference here? The difference here is the candle before it. And the candle before it is a doji. And it's a doji at resistance. So that would have been a perfect entry, and you would have had a nice 6 days of nice trading action. And this thing just took off, took out all its highs, and away she goes. It'll be interesting to watch this coming in the next week. One of my favorite past trades is a Euro Aussie. This blue candle must have been Thursday, I would think, or no, it was Wednesday, where this just took off and never even looked back. Really, you know, this is a great pair to trade. When it trades in its trend and it's moving, it moves very nicely. You know, this pair is good for 130 pips a day, folks. You know, keep an eye on this Euro Aussie pair. You know, who cares if it's going up or down? I really don't care. But it trades really very nicely. So now with this 200 exponential moving average, it'll be interesting to see how our next Asia session starts. Even though I wouldn't take a trade with this in the next Asia unless there was some significant Aussie news coming out. If not, I wouldn't trade this at least till London Open and see where she wants to go. Because right now, price is below the 200. All right, here's the CAD yen. We don't do a lot with the CAD yen. Maybe we should, but this is pretty nice. Nice move off this 200. Look at this. It breaks the 200 and comes back down, and basically that was the end of that. And away she goes. A psychological area 98. Triple zeros there, give or take two. And, you know, this thing just dumps like a rock. You know, would have been nice to put that on, and they just, like, forget about it. The hard part about this is the drawdown. The drawdown is that your drawdown's got to go up to that previous support area. So, you know, you're probably risking like probably 80 pips or 90 pips on that trade. but you made a lot, a real lot, like over 300 pips you would have made on that trade. All right, here's a New Zealand yen, another great pair to trade. I enjoy looking at this pair. I don't trade it personally, and not that I wouldn't. It's just you can only look at so many pairs, and I watch 8 pairs on a regular basis during my trading day. But this is a nice pair to trade. Nice bounce, broke the 200. It even gave you the pullback. There was that blue candle, right, the next day, right? Gives you the pullback. Next day is red. Boom, there you go. Short it. And, where does it come down to? It comes down to that 84.75, right? That's the floor. Take a look at left of the chart. That's previous support. You get out of the trade. I mean, you just can't beat that. That's over 300 pips. Beautiful trade. Really. Pull back and all. I mean, what more do you want? Breaks the 200, gives you a pullback, and the next candle is red. What's the problem? You might have got nervous the next day when it, went up and then came back down again. But, it just worked. Worked really, really well. And your drawdown was really pretty small. I would have put my stop just on that second wick above the 200. And here's Aussie New Zealand. This is a great pair to trade. I do trade this on occasion. This is just absolutely beautiful. If you fibbed this large swing, we're probably pretty close to that 50%. It's come back down. Looks like it bounced off it. Look at where the last red candle is on the right side of the chart. Take a look at the left side of the chart and look at what we have. We have resistance. Always, always, always look at the left side of the chart, folks. It will help you so much to know areas where you're going to have trouble at. And sure as it is, there's trouble there. And if you win that trade, you would have exited, hopefully, before this thing started to the downside. And unfortunately, fortunately, I'm very happy to be here. Being in Thailand, Asia opens about, I think it's 5 a.m. in the morning for me. It's either 4 or 5 a.m. in the morning it opens for me, so it's quite early in the morning, and I am not at my charts. All right, here's our good old Euro Yen doing its thing, just hobbling on down here. Just nice Forex action, hung around the 200 for a couple of days, finally broke it, gave you doji. The next one was a nice candle. That was your entry. Could have went in, gives you, now I would have fibbed that swing, and what happens? Yep, it pulls back, right? Pulls back, and I bet that's 38.2, and what does it do? Drops like a rock. This was a really nice, typical Forex price action, and it did really well. And Aussie Yen, again, the Aussie's weak, the Yen is stronger concerning this pair. And again, nice pop off the 200 exponential moving average. Yeah, look at these Bollinger Bands, wide open to the downside, just absolutely wide open to the downside. Sorry, traders. Yeah, so nice move to the downside, and just moved right along. Sweet, sweet trade right here. It was a little choppy. I wouldn't want to be sitting in front of my charts watching this. This is one that you put on and you come back Friday and see how you did. Here's the beast. Now, there's a lot of pips here, but this is an ugly chart. I mean, it's in consolidation. It's hovering on that 200 exponential moving average. It's not doing anything. Look at the top and bottom Bollinger Bands. They're looking at each other. This is a no trade zone. No trade zone. Do not trade this pair. Okay, so when we come into our next Asia session after our weekend break, do not trade the pound yen, the beast. Leave it alone. It hasn't decided what it wants to do. Leave it alone. There's 42 pairs out there, 41 pairs. There's plenty of pairs out there to choose that has, some decisions. This hasn't made a decision what it wants to do yet. So I wouldn't touch this at all. And ending all week with our dollar index, folks, this is just unbelievable. We just keep getting higher highs and higher lows. The dollar keeps getting stronger and stronger, even though I understand, I haven't looked at the numbers, but I understand that the numbers on Friday, the markets closed in the red on the indices on Friday. Like I said, I have not looked at the numbers. Traders, always great to be with you on a Saturday. Yes, it's my Saturday. It's your Friday night. And it's always great to be with you.